All right, welcome to the Dales Report. Happy to be joined with the executive chairman of Humble&Fume, Sean Dim. Sean, how are things, and welcome to the show.
Everything's great. Thank you very much for having me.
Yeah, it's great to see your face again. Obviously, we remember you with the days of the Aphria days, but now executive chairman of Humble&Fume. So let's get an overview of the company. With over 2,700 dispensaries in Canada and rising as of December 2020, and adult use sales reaching new highs month by month. It seems like cannabis distribution, which is your company, is a good business to be in. So what's the most important mission statement that you would like to communicate to our investor audience about your company, where it is today and where it's going as the industry continues to grow?
Yeah, so cannabis is a Humble&Fume is a distribution platform for all cannabis. Our origins are in hardware and accessories.
Yeah.
And Canada is leveraging that core platform of accessories to get into distribution of cannabis products, where now our sales into dispensaries are greater than that of head shops, which we've been in for 20 years. And really what's exciting and where the opportunity exists going forward is we think we can replicate the success we've had in Canada and the United States. And as we all know, that market's still developing and
huge.
In the long run will be 10x or more the size of the Canadian opportunity.
So
we're really just at the surface.
Let's first talk about the Canadian landscape. I know there's a lot of people have said, like, stocks were crazy overvaluations, obviously from 4 or 5 years ago, but where are we today and what's the opportunity that it presents, knowing that you've got a big footprint already positioned across the country?
Yeah, I think I look at our Canadian business as being like Canada's growing tremendously. Like everything that the expectations that people had were great. We're above a $3 billion market. We're growing to 5 billion plus, and I'm confident we'll get there. I think when you look at the number of brands that are out there, it's really hard, and LPs, it's really hard to understand, who's doing what and how you have success as an investor. And even as a retailer, how you understand which products to carry. And that's really where Humble&Fume fits in. We provide a full suite of products to a retailer to make their purchasing decisions easier and drive same-store sales growth and value to their customers.
What product do you see as is it still flower number one by far?
Yep, it's still flower. I think it's going to continue to be flower. I think there's definitely, you see some changes to preferences. And what's great about our portfolio is that as preferences change, it may impact one area negatively, but it typically or almost always impacts another area positively. And so, example that's often used is early on in COVID, you weren't seeing consumption of pre-rolls because everyone was at home and could, prepare their own joints. And now that you've seen that, things opening back up again, the pre-roll category is driven by sort of a more social setting, it appears, based on the data. And so I think flower is still going to be the leading category, but we're definitely seeing changes in consumer preferences over time.
Are you seeing a steadily rising in revenues in your distribution and brands business that's in line or above the market growth of cannabis sales in Canada?
Absolutely. I mean, we've grown. Last year, we grew over 50%. This year, or first quarter this year, which is published in our filing, we grew at in excess of 50% as well. And so we continue to see very strong growth. When we first made our investment, I'm talking about Greenacre Capital, the fund that I co-founded. In Humble&Fume, we were at 17 million in trailing 12-month sales. About 5 million of that was from the United States. This year, if you extrapolate, those numbers will be, in excess of $50 million in the United States. And so, and we still think that there's meaningful growth, particularly on the plant touching and supporting and servicing dispensary side in the United States.
Good to know. Well, let's talk about the US. You also set up US brands and distribution, a business through your Winship Trading Company subsidiary. So tell us a little bit more about these operations and what it all means.
Yeah, so Winship Trading is a business that's been around for 15 plus years. As I said, when we first invested, it was doing around $5 million in sales. Really just by supporting the growth of the business through working capital and traditional investment in infrastructure to support its growth. We're now trending towards doing 50 plus million in sales this year. That's on the hardware and accessory distribution. We're not plant touching today. That's predominantly to smoke shops and e-commerce platforms today. And where we see, transformational growth for our business is to get into supporting and servicing dispensaries like we do in Canada, both with accessories and with cannabis itself. So building out a portfolio that simplifies the retailer's purchasing process, drives same-store sales, and creates a better experience for the cannabis consumer.
So what is, we look at the US market, Joe Biden gets in, the Democrats control the Senate. Everybody's all optimistic about the US market. It's been kind of like stalled a little bit because, a lot of things haven't come to fruition from a legislative standpoint, but is that a good thing or a bad thing? And then in terms of total addressable market, what should, I guess, the Safe Banking Act or the Schumer bill legislation mean to you if Joe Biden does sign off on everything?
Yeah, so I think a lot to unpack there. I'd say that the Schumer bill as proposed would be tremendously valuable for all industry participants, companies, and investors. I think it does two things that have huge benefit. One, it'll allow for greater investment, greater access to capital, which will increase profitability. And then I also think because it opens up access for new investors and new strategics, I think it'll drive up valuation multiples as well. So you get that double whammy of higher profit and higher valuation multiples, which will trigger outsized returns. I think in the very near term, any delays, what we've seen is the market's been a bit soft. I feel like that's a bit of everyone getting overexcited about feeling like the political landscape was going to drive immediate regulatory change. It's going to take maybe longer than people were expecting. But I also think for those that are actively participating in the market, that creates a landscape that's maybe slightly less competitive. It crowds out some of the traditional industry participants, and allows companies like Humble&Fume to build a business with maybe a bit less competition than I expect to see when we do have those regulatory changes in place. And so I look at that as a near-term opportunity that benefits us in a bit of an arbitrage to the benefit of Humble&Fume today.
So as you build out this whole overall execution, what really grabbed my attention, the company went public, obviously, back in June in 2021. Lots of attention was focused around your executive team, which includes yourself, CEO Joel Tagura, and director Jacob Ripstein, all three with connections to Aphria, which is now Tilray. When I bring up Jacob's name, for a time, he was one of the most high-profile cannabis executives in Canada, taking on a public role as Aphria's president. So what's this say about your company when you look at the experienced roster of big cannabis leaders that you've assembled, and most importantly, thrive in a very competitive market?
Yeah, I think they may be public facing from a cannabis perspective, but I think what's even more important about their experience, their expertise, is their backgrounds in the alcohol industry. Jacob, previously CFO of Diageo North America. Joel was a senior executive at Southern Glacier Canada, and I believe employee number one there, and helped build out that business. And when we think of ourselves as a distribution platform, I think leveraging their experience in the alcohol industry and using some of what the exposure experience they had to help, with our building our business plan and then executing on that business plan. I think Joel's a tremendous operator and provides sales, marketing, and operations execution expertise that's really going to drive our business. And so I think we're building out the right team, the right depth to pursue these opportunities, and I think that'll show in our future results.
Well, when I look at somebody like, as you said, everybody, it's all assembled, very strong team. Jacob in particular, obviously with his background with Diageo, translate this for me. With a lot of his connections, obviously with Diageo, you enter into the US market. What's this mean for investors and the relationships that he can bring to fast forward your footprint into the US?
Yeah, I'm probably limited in what I can say, but I think you're
it's media, Sean. I gotta push you, huh?
Yeah, you're on the right track, and that's absolutely right. I think we are having discussions with non-cannabis strategics about opportunities. Who knows where they'll go. I think it's important to make that. I'm not tipping my hand, but it's also clear to say that anyone in the industry knows and understands that non-cannabis participants, particularly in alcohol and tobacco, have an interest in the cannabis industry, and they're looking at and exploring and trying to understand, what's happening in the industry and how they can enter when it's permissible to enter. And so we it's our goal, and we look to involve ourselves in those discussions whenever we can. And so having team of seasoned non-cannabis executives like Jacob and Joel, I think helps
Yeah.
that.
Pabst Blue Ribbon, Anheuser, they've all expressed interest. But yeah, we haven't even scratched the surface yet as far as the cannabis beverage landscape is concerned, don't you think?
Correct. I think go back to what I said about sort of industry growth. I think that's going to drive further investment. That's going to drive, growth and revenue and profitability in the industry, and I think it's going to drive up multiples. So, that's my big pitch for why everyone should be an investor.
Let's look at some of your forged partnerships with some of the premium craft growers, such as 48 North, Supreme Cannabis, the latter of which was acquired by Canopy Growth in April of this year. Are you seeing increased sales opportunities either directly with Canopy or indirectly following the acquisition?
It's something we're exploring with them, and we think that the model for our sales agency model is very attractive from a P&L financial management perspective. The reality is that by building a robust portfolio of brands, both big and small, that we can serve, whether it's beverages, whether it's edibles, whether it's flower, pre-roll, or accessories, which is our origin, that we meet the needs of all of our retail customers, and we simplify the purchasing process for them. And so that'll be true of any of the LPs, and particularly if you're a mid-sized one, the value proposition is that we have a team of roughly 30 salespeople selling into dispensaries. If you're 48 North, it's not economical for you to go out and do that on your own.
Right.
It's
exactly.
economical to be part of a portfolio. And if you're a retailer, you don't have time to talk to 700 LPs about why they want to sell you their product. They talk to Humble Cannabis Solutions, which is the name of our sales agency, and we provide them what we hope is a one-stop shop where that's the only conversation they need to have.
Right. 30 people, business development. It's quite the infrastructure that you built so far. When I look at your financials, you generate over 43 million in revenue for 2020 fiscal year. You have somewhat of a lower profile with investors, but looking to obviously change that, which could maybe attributed the fact that you just went public recently and back in June. So why did it make sense to go public now? And what should investors get excited about within your company moving forward?
Yeah, a few things. I just did want to clarify, like our fiscal 2020 ends June 30th. During calendar 2020, okay, we did about 61 million in sales. Okay. So show the growth ramp. As far as what's exciting, I think, we've touched on it during this interview. It's really all about the US opportunity. That doesn't mean we continue to have strong organic growth in Canada. We'll continue to have that. But when we look at how transformational and how early stage the opportunity in the United States is, I've used the stats in the past before that, the cannabis industry in the United States, about $20 billion. Green Acres published a report that says we believe it'll over time be 100 billion plus. And we look at on the distribution side, we think that the industry is sort of no bigger than $1 billion today. And we think ultimately that could be about $20 billion. So, when you talk about can we grow in a way that's outsized of what's already strong industry growth, I think we have one of the best opportunities in the cannabis industry to do that.
Are there certain competitors that would match up, I guess, in the same sentence as you, that are already established in the US market? And if so, what would those be?
Yeah, there are competitors for sure. If we talk about the accessories, there's definitely Green Lane. On the distribution side, there's Herbal, Nabis, and Kiva in California. But we've developed a plan, and as you mentioned, we're building a team that we think we're Great. Uniquely positioned to compete and grow effectively against the competition that exists in the market. And to be honest, I think we will all have very strong growth. So they can compete effectively and grow their businesses as well, and we can all thrive.
Well said. So, everybody thinks you only have to have one winner in this industry, but as you said, this could be anywhere from 20 billion to 100 billion. Lots of opportunity for lots of people. Is there any specific markets within the US that you have your sights on right now?
Yes, I think as a starting point, California makes so much sense because it's just so big, and the model more closely reflects that of Canada. Like, it's very open. There's fragmented licenses. There's a lot of retailers, a lot of brands, which I think is ultimately the dynamic that lends well to the distribution model, to an outsourced distribution model. And if we look at the market design that's going to be in place in New York, that too will
Right.
end up being a massive opportunity for distribution. No single retailer is allowed to own more than 3 stores. There's going to be many cultivators and producers of product there. And the job of a distributor is to marry the brand partners with the retailers and ultimately provide the best experience for consumers.
Do you think with your team and the experience that you've had here in Canada, that your level of experience gives you a, as much as everything that unfolded in the Canadian landscape, at the end of the day, you've got a team in play that obviously has a lot of experience. What would you say in comparison to some of the US companies that are actually being run right now? Do you think that you have a couple of steps forward, knowing that you've been in this maybe a little bit longer and understand the landscape of it all?
Yeah, I think, like I said, I think that the Canadian experience being as open and competitive as it is, like Canada is the most competitive cannabis market in the world. And so being able to compete and succeed, well, first fail, make mistakes, and then ultimately succeed in this market, I think positions us to have a great deal of success in the US.
Yeah.
And you'd mentioned 2,700 dispensaries in Canada. I'm not sure of the exact number now, but I know it's in excess of 2,000. California has a larger population and only 700 retailers. So when you talk about how you have to compete in Canada versus the United States, this is the most challenging market in the world. And so having some success in this challenging market, we think, and the team that we built, we think positions us to do very well in the United States.
It's an eye-opening stat. Cashed up, got a great team in place and a big opportunity. I appreciate you taking the time, and let's keep in touch.
Thank you. I appreciate this.
All right.
Very nice
Thanks, Sean.
speaking to you, Shad. All right.
You as well. Take care.